I really want to start off by thanking Dan and Winvesting for putting on this great event. I'll tell you, a multi-speaker event like this takes a huge amount of coordination, headaches, and sleepless nights, and my hat's off to Dan and his crew for doing it. Um, Coming up behind me, Patrick, Marcelo, Greg, and John. Stick around for those guys. It's really, as an investor, as a trader, it's really important to find your way, to find your specific way of trading by following and listening to a lot of different people. And I totally and completely buy into Dan's and Winvesting's philosophy on trading. I'm going to go into that a little more detail as I go through my presentation, but I actually refer to myself as the anti-trader trader because I don't consider myself a trader. And I want to give you guys a little bit of background here. Let me move to my first slide here. My name is Scott Morris, and I own the oilmoney.com. I'm in Austin, Texas, and I've been online for 5 years. And the way this whole thing got started is I used to be a real estate investor. So I've done over 1,000 real estate transactions, and I had a webinar company or a seminar company. I traveled all over the country teaching people how to invest in real estate and how to buy and flip houses. And in the process of doing that, I met a lot of people who were traders. And so finally, one day I took a look at trading. And as I looked at trading, it appeared to be a really cool way to invest money and make a lot of money without the enormous risk that I was taking every day investing in houses. And you know, when the interesting thing about investing in rehabbing houses is you're not actually investing in the house, you're investing in the idiots that are going to rehab the house for you. And there are no good rehabbers. There are only degrees of bad. So you try to find the best of the bad, and if you find a good crew, you might have some success in that business. And so based on my experience doing that, trading seemed really like a really low risk opportunity for me. And so I started sort of dabbling in oil trading, CL, Brent, and the NG. And I had some immediate success, and then I had some immediate, subsequent failure. But I saw the opportunity there, and so I started like reading books and listening to gurus, and I very quickly discovered a couple of very interesting things. And one of them was that everybody's got a different idea about trading. Everybody's got a different philosophy. I discovered that there are a lot of people out there who sell systems that don't actually trade, don't actually use those systems. I discovered that a lot of the gurus out there are not traders at all. They simply sell stuff. And most of the people that you will talk to don't actually risk their money in the market using their system. And so right out the gate, I want to tell you that the system that I developed, I use every single day, trading day of the week. I use my very own system. And I'm going to show that to you in just a minute. But it's really important. It's always been really important to me, and this also gets me in some hot water, which is why I really liked Dan's introduction there. Because one of the things that I have learned is that trading today is nothing like trading was even just 5 years ago or less, and especially many years ago. So it is a brand new day. One of the things I'm going to talk about this morning is how in the past psychology, human psychology played in, I should say group psychology played into trading and how the markets move, and it no longer does. But there are a lot of people that are still following those kinds of trading systems that don't actually work anymore. So it's really, really important. So many people when I present my program and talk about my trading philosophy, I hear the voices, and I also get the emails later and the comments in the chat. Just get on with it. Just show me your system. And these are people who have already decided, how they want to trade. And they just want to see the latest, gizmo that I have to offer. But the reality is that, it really does require you to think about this. You really need to understand what trading is and how trading works. And if there were a single thing that I would recommend to all of you, it would be find a brand new book that was written in the last 12 months by a technician, okay, by a computer programmer, and get that person's assessment of how the market works, how the candlesticks move up and down, how the SMAs move and give you data, how data feeds work, because everything that you will do from here into the future will be based on that, on those technical aspects of trading, and not on human psychology. Because for the most part, there are individual traders out there like me and you. There are millions of them around the world. But the majority of the movement in the market is not created by little guys like us. It's created by robots. Okay? And it's very, very important that we understand that. And once we do understand that, we start to realize that we have a lot less control over what is happening than we actually do. The only thing that we can control is what's happening on your screen right now, and the way you read the signals that are happening right now, and who you learned how to read those signals from. Well, I learned a long time ago that I wasn't going to learn how to read signals. I could not. I'm not an analyst, and I don't believe that a person can analyze the market quickly enough to make effective decisions. It's a supersonic marketplace, and human beings simply can't make supersonic decisions. Okay, so let me get started here. Today I'm going to show you how we, okay, me and the people on my team, earn $100 to $900 a day. Now that may not sound like a lot of money, but if you can consistently earn $100 to $900 a day, you can very easily earn a six-figure income. And one of the biggest mistakes that traders make is traders don't have a plan each day when they go into the market. Traders go in, and maybe you're one of these, and be honest with yourself, because honesty is going to be very important in today's lessons, and this is with all of the speakers coming up behind me as well. Ask yourself, do you have a trading plan every day when you go into the market, or do you simply say to yourself, subconsciously or otherwise, I'm going to get as much as I can. I'm going to ride that trend as far as I can take it. Well, most traders do think that. And unfortunately, when you think that way, and there's nothing wrong, look, there's nothing wrong with taking as much out of the market as you can take. If you're in a trend and you're following that trend, by all means, keep moving your stop until it takes you out. All right, get as much of it as you possibly can. Sometimes we'll catch ourselves in a trend that'll take us to the stratosphere, and those are great days. But on a day-to-day basis, earning $100 to $900 a day and ending the day with a green number is always a good thing, and you can leverage that. Speaking specifically to beginners right now, when you first start, you usually start with, at least people that join my program usually start with an account that has between $2,500 and $5,000. Now, most traders, quote traders, gurus, will tell you that you shouldn't start trading with less than $25,000, and that's complete nonsense. And I'll tell you why it's nonsense. Of course, there's some good theory behind that, why you would want to start with a larger account. Well, for one thing, it keeps you in the market longer, it allows you to take more risk, and so on. And you can also blow out a $2,500 account very quickly. But the way we do it, a $2,500 account can last you, even mostly losing, can last you for several months. And here's the beautiful thing about what that means is it allows you to trade real money while you're learning how to trade a system. And that's just part of the investment that you have to accept. Because if you don't accept that up front, you're going to lose the money anyway, and you're just going to lose it a lot faster. So accept the fact that you're going to have to make an investment in your education. The question becomes, what's your learning curve going to be? And all of a sudden, whenever you end a day, a trading day, with having lost $100 or $500, all of a sudden a green $100 is very, very nice to look at. Unfortunately, we don't see that until we're looking at it in the review mirror and wishing that we hadn't taken that last trade. And so making $100 to $900 a day can easily be leveraged, just like Dan said. Small gains every day gets you to the finish line. Another thing is we trade without stress. I remember when I first started trading, I had heart palpitations. I thought I was going to have a heart attack, and I'm a really healthy guy. But every day it was so stressful. I started to hate trading. Well, how do we take the stress out of trading? Okay, this has taken me 5 years to develop. Automated signals on charts. It's really, really simple. And if you have a system that you trust, whether that be my system or anyone else's, but you have used this system for a period long enough that you trust it, and you are able to take every single trade that that system tells you to take, that begins to just eliminate the stress because you trust it. It has a win-loss ratio that is good. That means that at the end of the week or the trading month or whatever the period is that you're calculating is going to end up with a green number. You're going to end up a winner. And so you can now, without frustration and without stress, you can start taking trades. Because I'll tell you something, I'm also a little bit of a health nut. And I know one of the things that kills us over time is cortisol. When we get pissed off at something, that stuff just wells up in our bloodstream, and it does destruction. It gives you free radicals. And the same thing was happening to me every single day. So like here I am in my office trading, and I'm like pumping my body full of cortisol, and that's not healthy. So I'm starting to think now I'm going to stop doing this. It's easier to deal with drunk, chain smoking rehabbers, doing a house down the street than it is doing this. Okay, so we need to take the stress out of it, and with automated signals on charts, we can do that. Another thing you have to be able to do is you have to be able to trade as few or as many hours as you want. And this is something, another reason why, when I said earlier, you have to really be honest with you right now. When this process or this program is over, I want you to really sit down, for a quiet moment and assess the way you trade. It's really important that you understand the things that are causing you to win or lose. All right? When we win, we think we're brilliant. When we lose, we throw tomatoes at the computer like it's its fault. It's got nothing to do with it. All right? So often, we trade and we know we should quit because we have to leave for work or we have to take the dog to the vet or something, and we force a trade. And when you force that last trade, one of the biggest advantages that I gained was because I'm human, just like y'all, most of you anyway, whenever I would feel myself, I would detect myself doing that, and it always came toward the end of my trading session. I had something else I had to do, and I would be hunting for that trade. I wanted one last trade. Whenever I felt myself doing that, I would turn the computer off and I'd walk away. That right there, that single strategy has saved me hundreds of thousands of dollars, I have no doubt. And then TOE 3.0, the name of my company is The Oil Money, and the latest version of our trading system is called The Oil Well 3.0, all right? And so that's what TOE 3.0 stands for. So then, as far as simplicity and stress relief and making $100 to $900 a day consistently, incorporating TOE 3.0 into your busy schedule, we all have busy schedules, okay? Now, I have multiple online businesses, so my morning begins here in my living room. I'll have a cup of tea, I'll come in here, and then I'll trade, all right? And I'll trade for a couple hours. I usually only trade between like 7:30 and 9:30 in the morning, or 8 to 10 in the morning. I'm in Austin, Texas, so that's Central Time. And those are the hours I trade. I don't care. It doesn't matter that I catch the opening bell. It doesn't matter, those things. As long as I'm trading in the morning when the volume is picking up or at its peak, that's what I care about. Okay, so I don't lock myself in. But what I do lock myself into is a period of time where I'm going to trade. And when that period of time is over, I walk away. And the reason I do that is because I don't like working for money. All right? Most of us work for money every day. We go to college, we get a degree, we get a job, and we spend the rest of our lives in a cubicle earning money so that we can then go and on the weekends live our lives and do the things that we love to do. That's bull crap. That's no way to live. So I don't live that way. I trade and I have my online businesses and I spend most of my time doing what I love to do, which is traveling and spending time with my family and reading and some adventure stuff. But seriously, trading can give you what you want, but it can also take all of those things that give you the ability to live the way you want and give you what you want. It can also take all those things away from you if you don't hunker down once and for all and develop a system that is going to work for you. Okay? It's really, really important that you do that next. So let me go through a couple of bullets that, to me, I've after working with thousands of traders, these are the reasons why most traders fail. Not all traders, but most traders fail for these reasons. And the first one is they follow the wrong advice. And you know what? You're going to see the rest of my bullets here, and you're going to go, well, he's got like 4 bullets there that all mean the same. And it's true, because this is really, really important. When we first get started, and even if, once we've traded for years, we're not necessarily experienced traders or professional traders. I mean, look, here's another thing you got to be honest about. Are you a professional trader? Have you been trading for 10 or 20 years, doing institutional type trading? Have you, have you worked for a company? Have you been scrutinized by real serious, Wall Street type traders? If not, then you're just like me, okay? As a matter of fact, I don't even call what I do trading, because, now let me tell you why. This is important. When I first started, I wanted to teach ordinary people, just like you and me, how to make $100 to $900 a day trading oil. That was my goal. And so my message, how could I possibly go out there and try to attract, right? I wasn't a real trader myself. I can't speak the language, the lingo, all right? So I wasn't going to be able to fake anybody out, and I never wanted to fake anybody out. So if I'm going to do that, I've got to be really, really serious about, how I'm talking to people, because if you talk to most gurus, they will tell you, oh my God, no, stay away from this. It's like reading the government disclaimer. Have you ever read the government disclaimer when you bought your house? It's as scary as the disclaimer they make us read when we open a trading account. All right? It's the government trying to scare us away from doing something that is actually fairly simple and anybody can do. So, we got to get over that first. Why do we read the disclaimer on futures trading and not the disclaimer on buying a house? Because we understand that bricks and mortar thing. We understand that it's probably not going to burn down between now and the time we sign the papers and get back to the place and get moved in. The same is true here. Okay, we can make money here, but we have to follow the right advice. And the right advice usually, guess where it comes from? The right advice usually comes from your intuition. All right? We so often listen to people who tell us things that don't make any sense, but because we don't have a particular level of education in that field, we believe them, we trust them, and we have to stop doing that. We have to trust ourselves more. Okay? Trust me, this is going somewhere. If I can get you to start trusting your intuition more, you will start making better trading decisions. Okay, they use systems that don't work. This is something that you've probably figured out already. If you bought a system, why? Let me ask this question. Why, if you bought a system a year ago or 2 years ago, does it not work today? That's very frustrating. You spend thousands of dollars on trading systems, and next thing you know, they don't work. And the reason they don't work is because the data feeds are so fast. The business of trading is changing every single day and becoming more and more complex. And if the system that you purchased doesn't come with a team of programmers that is, excuse me, that is constantly upgrading and updating that system, it is going to fall behind, and it's not going to be able to keep up with the latest data feed speeds, SMAs, whatever logic the trading system is using to give you signals. Okay, so that is the main reason why could be using a system that no longer works. Okay, your philosophy may be perfect. You may have all of those things in place, but if the system is antiquated, if the system doesn't work anymore, it's not going to work for you. And they use systems based on what Joni Mitchell called pretzel logic. And now, the next thing I'm going to go to here, I don't want anybody to get pissed off at me, okay? I want you to just relax, take a couple deep breaths. But Fibonacci and Elliott wave theory just simply don't work anymore. And I'm going to explain why they don't work. Now, Fibonacci obviously is a method of mathematics. I love mathematics. Everything that we do in trading is based on mathematics. And so the foundation of Fibonacci is sound, okay? And it's been proven over and over again that it is. However, it works in a universe and in nature in a way that it doesn't work anymore in trading. And it's the same with Elliott, okay? So Elliott developed a system by which he could apply a 5-count and then 3-count retracement to almost every kind of human behavior throughout history. He looked at human evolution and human psychology and human history, and he found this interesting wave of population growth and population decline and income growth and income decline and so forth, and it always went in 5 waves and then 3 back. And so he applied this to trading as well, and it worked, or it seemed to work. But guess what? It's based on human psychology, human behavior. And today, trading has very little to do with human behavior, with human psychology, because we've got robots out there making these trading decisions, okay? Robots everywhere making these gigantic moves in the market. So how then can you figure that if you've got individual traders out there like me and you making small moves every day, even collectively, is not going to in any way create an Elliott wave that will outpace or outperform or in any way give you any kind of semblance of reality of what the market is really doing, because the individual traders like us are really, really small in comparison to the robots out there. One day I used to work for FedEx 30 years ago when they first started. And FedEx was this huge company, I thought, because they had DC-10s, they fly all over the world. And I never liked UPS because they had these brown trucks and airplanes. And one day I saw, this was not too long ago actually, I saw a comparison of UPS. It was a chart type comparison of how big UPS is and how big FedEx is. And UPS could literally swallow FedEx like into robot trading, aka EFT trading, and individual trading. And so for those reasons, Elliott wave and Fibonacci's no longer apply in the modern trading world where we operate. As I said, this is no longer psychology. It's supersonic math. And human beings are simply incapable of doing supersonic math. It's not possible for us to look at a chart anymore and have any way to predict it based on Elliott waves or retracement theories. None of that is applicable anymore. Now, I want to also give you this disclaimer. This is my opinion based on what I have discovered over the last 5 years of trading. All right. And I don't believe that you really need, as a trader like myself, that you need more than 5 years to call yourself something of an expert who has a theory that is based on some reality. Okay, so I mean, it reminds me of it reminds me of my mother. Actually, I remember she used to be a housekeeper in Palm Springs, and she worked for Walter Annenberg at Sunnylands and met all the presidents and all that. And then she started, when she left that job, she went to work in a hotel, a five-star hotel, and there was Fernando was there, and he was the head housekeeper, and she was his assistant. And for years and years, I asked her, why don't you become the head housekeeper? And she said, oh, I couldn't, because Fernando has 20 years experience, and I only have 15. Well, I couldn't get through to her, but, I was trying to tell her, like, you know what, 15 years experience and 20 years experience is about the same. In fact, after 5 years, you probably know everything you need to know about the business. And it's the same in trading. And that's why I really get annoyed with these guys that have been traders for 500 years and they make you think that they know more than you do. They probably don't. They may know more people, they may have lost more money than you, and all those things may be true. But at some point, you know enough to make very sound decisions about your trading. And if you look at this presentation that I'm giving you right now, it may be elementary compared to some that you're used to. But I will tell you this, you can't look at any of this and say it doesn't make sense or it's not logical. Because every single thing that I'm going to tell you and every single thing that I do every single day in my trading and in my business has got to be based on logic or I don't do it. And it also has to be based on what I believe. It's got to make sense to me. So if some knucklehead guru tells me this is what's up and it doesn't make sense, Judge Judy says if it doesn't make sense, it's probably not true. And I love Judge Judy. They follow gurus who sound like they know stuff. I'm an internet marketer as well as a trader. And the big shift took place in internet marketing, or in marketing period, in business. And that very same shift I see taking place right now in trading. But it's slower, okay? So you've got these guys. Everybody knows who they are. They've been doing this. I have 5,000 years experience, so you got to listen to me. They wear suits and ties, and they think they can, impress you with that. The same thing happened in business. And then all of a sudden, in business, especially in online business, all of a sudden these guys, these young kids in T-shirts and beards started taking over the world and building companies like Apple, okay? And all these different online, and they wear dirty T-shirts and they look like crap, okay? They're hipsters. The same thing is happening in trading right now, all right? The old guard who have relied on their experience and having been involved for billions of years, all right, they're going away finally. They're finally dying off. Good riddance. Look at this group of young guys coming up today. Patrick, Marcelo, Greg, and John. Okay, check these guys out. This is sort of like the new breed, and I'm really see them. Back to the gurus. I especially love the foreign ones that have these very distinguished and mellow accents, and you just can't help but fall in love with them, and believe what they're saying because they sound so credible. The reality is, if you've ever watched one of my favorite shows on TV is American Greed. Watch that show if you guys know what I'm talking about, and you'll see how how easy it is for us to be lured in by a personality who sounds like they know what they're doing, and because we're so busy in our other life, okay, working a job or feeding our addiction or getting thrills out of life, that we give our money responsibility up to someone else because Joe across the street invested with him. Don't do that anymore. And then I think this is my final one. They're always trying to predict the market. So most traders fail for these reasons, and one of them is they try to predict the market. And I remember when I used to do that, I used to read I used to get up every morning. I used to read the forums. I used to try to figure out, what's happening in the Middle East, and is that going to cause the, oil price to spike or to decline? And I would always try to predict the market. And finally, I came to the reality that you can't predict the market, because you can't predict what these nincompoops in government, and especially over in the Middle East, are going to do that is going to affect the price of oil. And just when logic tells you, okay, that we export 50% of the oil that we produce in the United States, we export it, all right, and then we import that 50% that we export, we import that from the Middle East. Now, does that make sense? Of course it doesn't, okay, any more than it makes sense to pay a farmer a subsidy to not produce corn or wheat or some other commodity so that they can artificially prop up another product like soybeans or something else. So as long as we accept that these commodities are being manipulated by human beings and governments, then we have to accept that we simply cannot predict these markets. We have to give it up to some other thing. Okay, we have to give it up to some other thing that is able to predict what is going to happen. It's called mathematics. It's called algorithms. It's called robots that can actually detect minute movements in the data feed, in the market, so that it can then print those movements on your screen in the form of SMAs and candlesticks and signals that you can then read with confidence, so that you can then grab your little piece of the pie, tiny little piece of the pie, but it's enough of a piece of the pie to make you happy forevermore. That's what we're after. They can't manage their fear and greed. This is the last one, and this really is the big one. And this is one that you'll hear from all the old gurus, those guys that wear suits and ties, and the new gurus as well. And also, this to be true. The one thing I tell my students, I tell them, I can teach you how to do the mouse clicks in 5 minutes. All right, it'll take a lot longer for us to learn how to manage your fear and greed. You know as well as I do that you're in a good trade, and fear will get you out of that trade too early, all right? And greed will keep you in that trade too long. If you can find a balance in between, or find a system that shows you how to, manage that, or where to get in and where to get out kind of thing, arrow, green arrow, red arrow kind of thing, then you don't have to worry about your fear and greed if you trust the system you're working and you know that that system is updated and upgraded all the time. Okay, so those are the reasons, my reasons, okay? This is a very personal thing to me. These are my reasons why most traders fail. What's cool about it is we have some great speakers coming up behind me who are also going to talk about why traders fail. And I think it's a very popular theme. We all have our theory. This is mine, and you will hear other ones. And then I want you to apply your own logic, your own brain power, and make your own list of why you fail when you fail, and make a fully integrated, honest assessment of why you fail when you fail. Okay? Now, here's my truth. My truth is that I've discovered that trading is simple. It's not complicated. As a matter of fact, I want to suggest to everybody that you probably have enough education. Okay? You probably have enough education. And especially once you're finished with today's events, you will certainly have enough education. And you probably don't need to attend lots more webinars. Okay, you probably will, but I'm just telling you, trading is relatively simple. You got to find yourself a theory that you accept, a logic that you accept, a guru that makes sense to you, and or a trading system that you can use that makes sense and works on logic, okay, not theory. And that makes trading very, very simple. But I want to encourage everybody on the call today to not overcomplicate trading, okay? Don't overcomplicate it. I mean, look, we go and gamble in the casinos every day, and we don't overcomplicate that. We get us a drink, and we start gambling, and we accept the fact that we're going to probably give this money away to the casino. Well, why don't you start trading that way? accept that you have, today you're going to risk $300, and accept the fact that you're probably going to give that to the market, all right? Then follow your theory, follow your trading system, and just relax about it and make it simple. And if you do that, more times than not, you're going to win, okay? You have to simplify it. Take the hardship out of it. Trading is mathematical, especially today. We went over that, okay? And I want to really drive this this point home, because there are a lot of people who are still buying into this, psychological aspect of trading. Trading is no longer psychological. Trading is not driven by human psychology anymore. It's driven by mathematics and algorithmic mathematics, okay? So if you cannot predict algorithms, algorithms are based on data. Algorithms are based on numbers, okay? Algorithms are based on volume, all right? And you cannot. Let's take a look at this real quick, okay? So you're looking at your chart and you're making trading decisions based on lagging indicators, okay, and different colored candlesticks that are bouncing around in front of you. Now, those candlesticks and those lagging indicators are being created by data that is being fed into a computer that is very, very far away from where you are. And even though we are able to get this data in, fractions of seconds, the market moves so fast, the algorithms move so quickly, and the conditions on which those predictions or those color bars were printed are changing so quickly that by the time you make a decision, it is based on what you're seeing visually, it could be, and it usually is too late. So you need something that understands and follows the algorithm of of the data that's coming in before it ever gets to print a bar on your computer. That's what you have to have, because it's no longer a slow-moving market based on human psychology. Almost none of the systems from the past still work today. We talked about this, in the previous slide. Almost none of the systems from the past still work today. Now, when I say systems, here's what I'm talking about. I'm talking about theory, and I'm talking about systems like signals, okay? The reason the theories don't work anymore, most of the theories don't work anymore, is because trading has shifted from psychology to algorithm, okay? The reason the systems don't work anymore, as I said earlier, is because most people don't have a team of highly skilled programmers in their office like I do that are constantly wrenching, got their toolboxes out, and they're constantly wrenching on this system to make sure that it's keeping up with the speed of the marketplace, okay? I have two people who do nothing else all day long. They spend about 30 hours a day on their computers looking into the market, trying to figure out how to make our system better. And when they find a little tweak, sometimes I send out updates on such a regular basis now, people are becoming annoyed. But when there is one little screw that needs to be tightened just a fraction of a millimeter, I want them to have that advantage, and I send it out to them. And that is why most systems don't work. Most systems are built by a programmer that let's say somebody like me hires a programmer to develop a system, and I say, I want a red arrow when the market's going up and a green arrow when the market's going down. Can you do that? Yeah, I'll do that. So boom, 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 they program it, they give it to me, I call it the red and green arrow system, and I sell it to you for $50 a month, all right? Great, it works for like 2-3 months, and then all of a sudden it stops working. And then, because the guy that sold it to you isn't constantly upgrading that system every single day, when it stops working, it's just done. Now you got to go back to him and buy a new system. Okay, that's why most of the systems today don't work. It's nearly impossible, and most people just simply cannot make the capital investment to have a team of people working for them in-house that make this happen. Now, I'm not selling myself right now. I'm going to do that a little later. I'm going to try and sell you my system. But right now, I'm simply selling you on the logic of why systems don't work and what I have done to overcome them. Okay? These shortfalls. I want you to evaluate what I'm saying, not based on what I'm trying to sell you, but based on the logic of the words that I'm talking. Okay? That's all you have to understand. Does that make sense to you? Does it make sense that that's why most systems today do not work? And I'm sure you'll find that it's correct. Algorithms can be detected and acted upon. All right? That is the crux of my argument and my lecture today, is because we've moved, and we're not moving away from psychology. We are done with psychology. We were done with psychology and trading years ago. The only psychology that you need to think about is the psychology that exists right there in your chair when you're looking at your charts. That's the only psychology that matters. And the only psychology that matters inside that psychology is fear and greed. Okay? That's it. That's the only psychology that you need to manage. Psychology, mass group psychology, as it is used to count Elliott waves, is history. Absolute history. You can hate me for that if you want. All those nostalgic people that love Elliott wave. It doesn't work anymore. It's complete and utter garbage. Okay? Algorithms are the only thing that matter anymore. And like I said earlier, with the right type of system, with the right type of robots that are out there on the internet, okay, inside those cables, we can detect surges in algorithms. We can detect ebbs and flows. Before the candles ever reach you, we know what's fixing to happen. The market goes up, everybody knows that. The market goes down. Essentially, the way I like to refer to it is the market breeds. Okay, even if it's in a steep uptrend or a steep downtrend, the market breeds. Okay, there are a number of different ways that you can use this breathing effect. Okay, it's actually what we call it here is mean reversion. I'm going to show you a chart here in just a minute. And I'm going to show you how, regardless of what the market's doing, it always takes a breath. It always snaps back to the mean, which is the average of in the price channel. I'm going to show you that in just a minute. But we can detect when the market is going to take a breath. Now, do you think that if you knew when the market was going to take a breather, that you could capitalize on that and make the money that you need to make every day to be happy? Yes, you could, and that's what we do at the Oil Money. Okay, think about that for just a second before we move on. The market takes a breath. It always does. It goes up, and then it takes a breath. It runs out of steam and takes a little breath and comes down. Then it goes up again, keeps following its trend. If we could detect when it was going to take that breath, we could really capitalize on that and make some serious dough. So that brings me to the first chart that I want to show you, and I'm going to show you how we have used the logic that I've just described to design a very, very simple logic-based system that actually works every single day. And this very system not only works, but it's being tweaked on a daily basis so that it continues to work for all of our members. So here's the first look at it. I call this the oil well. All right. Let me show you how this how it functions. I'll show you the different components. Okay, first. So over here on the left, we have what we call the smooth CCI, and essentially what this is it's a divergence indicator, and we use it as a forecasting tool. All right. Now, remember what I said earlier. I can't stand to be saddled to my desk for hours and hours on end in order to not miss a trade. Okay, so this was one of the very, very important things that I wanted to incorporate into any kind of a tool that I was going to put out there, and that is that we had a forecasting signal. So as everybody knows, divergence happens when the price action continues in one direction and the volume starts to move in another direction. Okay, so let's just look at this bar right here, okay, this red bar that I'm circling. So in the price action, in the candlesticks, we see it going up. All right, so our price action is going up, and it's a red bar. And then down here in the volume chart, we have the same bar going down. And this is indicating that even though the price action is continuing up, the trend is up, the volume is drying up a little bit. Okay, so when that happens, you're going to get a ding dong. You would get a ding dong sound or some other sound, and you would be, if you were in the other room, for example, getting a cup of coffee, you'd be able to bolt into your office knowing that there's a potential trade setting up. So that's how we use it as a forecasting tool. As you can see, when this divergence happened, the volume dropped off, and we popped down for maybe 10 ticks. All right. So that's a breath. It just took a breath. All right. And then here we had the same thing again. So that's what we use that as a forecasting tool. Now over here on the right, we have a couple of charts. We have up at the top, we have a fast moving chart, and at the bottom we have a slow moving chart. Okay, so hopefully everybody can see my screen now, or within a few seconds you will see it. And this is like just a very clear, nice picture with some examples that I want to show you. So let's talk about the components to the TOW 3.0 signaling system. We have our price channel that is signified here by this dotted red line. And when it's a red line, when it's a red dotted line, it'll mean that we're in a decline or a downward trend. When it's a green dotted line, it'll mean we're in an upward trend. So as in the previous example, we would get a ding-dong signal letting us know that a trade is setting up. And that could happen when it reaches this high pivot, okay, or it could happen in the candlestick just before it. And then we will wait, okay, until the candlesticks start to come down, and that is when your signal will print. Now, when the signal prints, you will get another audible tone, a distinct audible tone, to let you know that you have a trade. The trade will then print a box, and inside the box, that's what I call your kill zone, okay? You can trade when the candle action is anywhere inside that box. You will also get, for a short, you will get a red dot or a red diamond, and you'll get a pivot point, and this would be where you would place your maximum stop. I usually place my stop, because these signals are so reliable, I usually place my stop 1 or 2 ticks above the dot, okay? And then I trail my stop, but this is the maximum stop. And as you can see, once the trade printed, we went into a downward movement. Okay, it's very, very simple. Now, these signals are so reliable. One of the things that I have done and has been tested is, we usually like to get into a trade with a limit order, right? I want to determine, I want to decide at what price I'm going to get into this market. I want to at least cover my commission, and I don't want slippage. The beautiful thing about this system is that sometimes, and this could have been an example of where the market is moving so fast that by the time you are able to react, your brain, your eyeballs, and your mouse finger is able to react to get into a limit order, it's too late. You're already beyond the box. So it's very acceptable to use a market order to get into these trades, all right? It's very acceptable, but this is something you would want to practice and get used to for those of you who, who are not used to entering a trade with a market order. So anyway, now we take this trade down. So now the next thing we have to do is we have to decide what strategy we're going to use to get out of the trade. Now, after this, as we go into the next section, I'm going to show you an example of one of my members who has been with us for 2 months now, and when I first started working with him, I told him I wanted him to go just for 10 ticks on every trade, no more. And he has methodically gone for 10 ticks on every single trade, even when the trade would have given him 100 ticks. Okay, but we'll get to Pierre in just a minute. But there are a number of ways that you can now trade this. So here, let's talk about mean reversion real quickly. So here we left the channel and it snapped back to the mean. It left the channel, it snapped back to the mean. Left the channel, bam. We got a triple top, quadruple top here with a couple of signals, snap back to the mean, and so on. Okay, so that's part of the logic that we use to print these signals. So how do you trade this trade? Let's say you get into this trade right here. Let's say at the bottom of the box, and you've placed your stop right here. The first thing you can do is you can take your 10. If you're trading one contract, you could just hit an exit at 10 ticks and get you out of that trade. Okay. Another way you can do it is you can simply trail your stop. And I'll teach you how to trail your stop appropriately. We're not going to go into that right now. Essentially, you would simply grab your stop in your dome or on your chart trader and move it down as the price action is moving down. Okay? Being respectful, the price action can move up at any time. You want to make sure that as quickly as possible you move yourself into a break-even position. And then your next goal is to move your stop one tick into profit so that you at least break even on the trade no matter what happens. All right? So if you placed a stop or a limit order to take you out after 10 ticks, you're out at 10 ticks. If you're trading oil, you make $100. Okay? My friend Pierre, who I'm going to show you in just a minute, he trades 3 contracts. So he'll take 3 contracts for 10, or 1 contract, and he'll get 1 contract out at 10 ticks. Then he'll get another contract out maybe at 20 ticks and another contract out at 30 ticks. Okay, so he's become over the last couple of months much more sophisticated in the way he trades, and his revenue is really, really skyrocketing as a result. Okay, so let's say you continue to trail your stop. You can, as soon as this price action penetrates the price channel at the bottom, you know that it's going to, at some point, it's going to snap back to the mean. It's going to take a breath. Now, the overall trend is down. You could get into this trade right here, and you could ignore all these and stay in the trade. You could still be in the trade right now. Okay? You could do that. But you probably won't, because each signal is an individual trade. And you continue to bring your stop down until the price action turns to green and it takes you out of the trade right here. Now, it's the exact same thing as if you would have gotten yourself out right here or anywhere else below the channel. Okay, and then our second, this is actually quite unusual to get a signal that is identical side by side. But I use this as an example to show you, like, let's take this one right here. If you had gotten into this trade right here, the second signal, you would have gotten your audible ding-dong telling you a trade is setting up. Then another audible signal when the trade signal printed, the box, the red dot, and your maximum stop. And this trade would have gone against you, and it would have been a losing trade. Okay? But here's the interesting part about this particular signal. The algorithm that it was reading over here before it printed this signal was 100% accurate. It was just a little bit early, because moments later it printed an identical signal, this one right here, identical in every single way. It's almost a carbon copy, and then it gave you a nice chunk of change. Okay? Now, depending on how you traded this one. So let's say we made 20 ticks on this one, or this was easy, 30 ticks here. We gave back 10 ticks on this trade, so now we're net 20 ticks, let's say. And then on this one here, 2 ways to trade it. Okay, you can go for your 10 ticks. You could have left your stop in place and you'd still be in this trade. You would have ignored this one. Or you might have even waited. If you're trailing your stop down, you might have even waited, and you might have either made a few ticks or broken even on this trade, the third trade. And then comes another big kahuna. okay? We've got a downward trend. We printed the signal, bam, and we're in this trade. And this is one you could probably stay in for the ages. So in the end, if you're trading all four of these signals, the very least you're going to end up with, you had either one losing trade, potentially a loser or a break-even trade, okay? This should not have been a losing trade, but if you had stayed in this trade and waited for it to penetrate the bottom of the channel, okay, and then it went against you, it might have taken out your stop, your trailing stop. So that could have been a winner or a loser depending on how you managed the trade. But here you had a big winner, here you had a big winner, and here you might have had two small losers. The two big winners make your day, okay? You're looking at over 100 ticks right there. So now what I want to do is I want to show you some examples of Pierre's trades. Okay, let me look at the time. So we've been at it for, I think, about going on an hour. So I'm going to rip through these trades real quick. Every single one of these trades is a live trade using real money, and in most cases, 3 contracts. Okay? Pierre joined us a couple of months ago, and Pierre has never traded before in his life. Now, this is not normal. I'm just going to say that up front, but in the last 2 months, Pierre has not lost a single trade, and that's why I'm using him. This is such a perfect example of what a person can do when, number one, they have not been ruined by other trading gurus who fill their brains with a bunch of gobbledygook. Number two, he follows my direction to the letter, essentially follows TOE 3.0, and he trades very conservatively, only for 10 ticks. So let's jump right into these are his. You can look at the dates up here to kind of follow along. I haven't chosen any of these in any particular order. I just took his trades, and here we go. And I'm putting them up there. So we're talking about last month, okay? So here we have the first trade, and as you can see, the box printed. And here, look, you can see how he got into this trade below the box. So he probably got in here with a market order. It was a fast-moving market. He got out right here. He made his 10 ticks. The second trade he took on the very second signal, bam, he gets in inside the box. He gets out right here. Here, I'll teach you how to do this also. You don't have to wait for a signal, although it's safer. But he is so confident now he's able to take trades that don't even give you a signal. He got in here. He got out there for another 10 ticks. He ignored this one, and here he took another one. Bam, there's his entry, there's his exit right there. Moving on. Here is a diamond. Remember I said we have dots and diamonds. A green diamond or a red diamond simply means that the price action has moved far enough outside the channel to give you a more high probability trade. Okay? So here, he enters at the very top, he exits up here. He enters right here, he gets out right here. He enters at the very top of the box, he gets out right here after he takes his 10 ticks. And this big move, he ignores. He was done trading for the day. Now here, he's using Chart Trader here. You can see this is his real account, and he's got 3 contracts. He gets his signal with a green dot. He enters slightly above the box, and the price action almost immediately moves against him. It doesn't hit his stop. He continues on up. It takes a little breather there, but it never turns to red, and he pops out of the trade. Makes his 10 ticks. Here, gets in right above the box and exits right here. Another successful trade for 10 ticks. Here he enters inside the box, exits right there. Beautiful trade execution. As you can tell, I'm rushing, but I think this can be boring because it's the same thing over and over again. And I've got Patrick coming up right behind me. So let me wrap this up real quickly. Here, another beautiful trade, and here is an example of he's trading. I think he's trading 2 contracts here. So he gets in with 2 contracts right here at the bottom of the box. He exits with his first contract right there. He takes it for another 10 ticks and exits with his second contract right there. Absolutely beautiful trade execution. Here's another example here. Here's another example here. His live account, obviously. And here is a diamond, beautiful diamond. He enters inside the box. He exits right here just as it's touching and penetrating the channel. Beautiful trade for 10 ticks. Here again, I just love pointing out the fact that my traders use real money. I trade real money every single day. When you start using the system, you'll trade it for a couple of weeks on the simulator just to get the handle of it, and then you'll go immediately to real money, okay? Because you can't learn how to manage fear and greed when there's none of that available, okay? And when you're sim trading, there's no fear and greed. And here again, 3 contracts on the live account. Bada bing, bada boom. We've got a red diamond. He takes it down for 10 ticks. So here's another one for 3 contracts, and another one live account, 3 contracts, 10 ticks. It's just, this is so thrilling for me. Oh, I didn't mention he's in South America. He's in a third world country. The reason I say this is because so many of us make excuses for why we lose. My internet connection isn't good here, and wherever. I invited him to be on a webinar with me some time ago, about 3-4 weeks ago, and he was uncomfortable doing it because his language skills were not good. Okay, so he didn't want to do that. He's never traded before. All right. I mean, he has what some would say everything going against him, but yet he's winning every single day, and so can you. Now, very quickly, I want to take you through the website. All right. So I've got my. I want to make sure that I'm sharing my screen with you. I know that Danny will let me know. Okay. Very quickly, what I want to do is I want to take you.
Scott, you're fine. We can see your screen. It went off the air for a minute, but now it's back.
Okay, thank you, Dan. Okay, so we're popping inside the website very quickly. I just want to show you how I've designed this. When you first come in, I'm going to need your machine ID, okay, to get the system, the TOE 3.0 installed on your machine. And right here, I've got you a little video. I go into step 1, show you where to find your machine ID, how to get it over to me so that we can activate you. We got our little oil splat signified here by the numbers. And so you go step by step, bada bing, bada boom, exactly what to do, even if you've never traded before. Then we have Tom University, or the Oil Money University, okay? And my slogan here is wealth belongs to those who do things, okay? Not people who sit on their butts and do nothing. And here again, we have the fresh, okay, so we have the update. So any latest updates will be right here front and center. And we also give you all the download links, okay, for the latest updates. And then we go into freshman classes. So if you're just starting with our system, you start in this section, and every single video will walk you through every step of the way until you have that under control. Then you go into graduate classes, and here are advanced strategies, and you teach you every step of the way how to use our system. So next thing you probably want to know is how can I get this system? So what I want to do is I want to give you the system. I want to get you started on it, and I'm only going to charge you $1. And what you're going to get for $1 is I'm going to set you up with a demo account with my broker for free. I'm going to set you up with NinjaTrader demo account for free. I'm going to give you full access, not like some kind of cheap demo access to the Oil Money and the Oil Well 3.0. Whatever you would pay, everybody who pays full price, that's exactly the system you're going to get. I'm going to give you step-by-step instructions, and I have a full staff that will hold your hand if necessary. All you got to do is say, hey, Scott, dude, I'm not getting this. I need some help. And I'm going to put a human being with you to help you. And I want you to use it for 7 days to prove it to yourself. Now, most marketers offer a 30-day money-back guarantee. Give me your $500, your $1,000, or $1,500, and I'll hold on to that for 30 days. And if you decide you don't like it, I'll give it back to you. I'm not going to play that game with you. I want you to try my entire system for 7 days for just $1. But I have to ask you this. You've got to use it. All it's going to take is a little bit of your time, but you actually have to apply it. You got to install it, and then you got to use it, all right, for just $1. And why do I charge $1 and not full price? Because all I want from you, I want to prove myself to you. I want to prove my system to you. More than that, I want you to prove it to yourself, okay? And if you use it yourself and it doesn't work for you, you cancel. There's a button in the website. You don't even have to ask me or tell me you're going to cancel. You go into the back office and you cancel yourself, and you're never charged another $1. But you got an opportunity to use a multi-million-dollar system for just $1. But you got to put in the time. Okay? That's all I'm asking you to do. Okay? Is try it for 7 days for just $1. The $1 is a commitment to me. But you know what's even a bigger commitment? When you pull out your credit card and you put those credit card credentials in the order form, that's the hardest thing to do. And it's the hardest thing for one of us marketers to get you to do. So if I can get you to do that, there's a good chance you're going to give it a fair shot. And that's all I'm asking. So if you want to give that a try, I want you to jot down this very special link. It's theoilmoney.com/special. And this offer is good for 24 hours. Why? Because you only need 24 hours to make a $1 decision. If you decide that you want to keep the system after the 7th day of your trial, I'll charge you $497, and that will give you a license for the next 12 months. The regular price is $924. So it's almost a 50% savings, okay, if you decide to keep it. But let's not even go there. The first to try for 7 days for just $1, okay? And if after 2 or 3 or 4 days you decide you don't like it, you don't have to worry about it. Get it back to me, I'll deactivate you, and you're done. But what I think is going to happen is you're going to realize what Pierre realized and what many of my other customers and members realize. I'm engaged with you every day. My entire team is engaged with you every single day, and we want you to succeed. And with the oil money, you can finally make money consistently every day by following every single signal. So jot this down. Go to theoilmoney.com/special. I got a little video there. Pop your credentials in there and get it for just $1 and get started right away.